Welcome back to BLOCKTV. It's time now for Stress Test. When it comes to the crypto sphere, the biggest drivers still seem to be fear and greed. And with emotions running the show, there's a serious need for the industry to develop more accurate metrics. But fortunately, we have with us the person who can help us to understand these things from a new perspective, the TIE co-founder, Joshua Frank. Joshua, thanks so much for joining us.
Thanks for having me.
All right, so this week we've got a bit of a special one, some major announcements coming in the works. But before we even get to all that, I think now is a good chance to stop for a moment. And for those viewers of ours who are only new to the show or haven't had the joy of watching Stress Test every week until now, to understand a little bit about the importance of sentiment data, what it is and how it works, maybe Joshua, you could help to break it down for those viewers at home.
Yeah, so sentiment is really a quantified representation of investor emotion. So when we talk about sentiment, what we're looking at is, hey, what does the broader market think of a particular asset, and what do they think is going to happen to that asset in the future? So when we at the TIE think about sentiment, what we like to think about is not, hey, I'm excited because Bitcoin went up last week. It's, hey, I'm excited because I think that Bitcoin is going to go up in the next week, or this launch excites me. So what we're trying to do when we quantify sentiment or put a mathematical number behind it is really to try to understand what investors' intentions are. Are they going to be buying an asset? Are they going to be selling an asset? Where do they think it's going to go in the future? So in partnership with a company called Social Market Analytics, which is a founding investor in the TIE, we've developed and built off of their multi-step patented process for actually quantifying sentiment. So through SMA, we're the only firm in crypto that has access to something called the Twitter fire hose, which is the full real-time stream of 850 million tweets a day. So that fire hose is basically sent directly from Twitter into our back end. We take that in, and then we employ a multi-step process. And I can show a couple slides that walk through how this actually works. So the first step is really just extraction, and it's extracting the tweets by asset. So at first that seems really easy, right? If you see a tweet on ETH, you'll probably think that that's related to Ethereum, but that's not actually always the case. ETH is Ethereum, but as we mentioned before, it's also Ethan Allen. NEM is the cryptocurrency NEM, but it's also Newmont Gold Corp. EOS is the cryptocurrency EOS, but Canon also makes a camera called EOS. I mean, the list goes on and on. There are thousands of examples, even Ripple, right? Apple, announcing that iPhone doesn't have good sales could have a bad ripple effect on the entire NASDAQ, right? And the word ripple effect, if you're just looking for tweets on Ripple, those kind of tweets may get picked up and there may be a sentiment attached to them. So the first step that we have to undertake is actually using our proprietary natural language processor to identify, what assets particular tweets are on. And that's an incredibly difficult process. And that requires tons of technology, expertise, as well as looking at histories of individual accounts, what they're typically talking about, looking at the context of tweets and conversations. So once we're finally able to identify what asset a tweet is actually on, we bucket, tweets by every asset. So I'll have Bitcoin tweets, Ethereum tweets, XRP tweets, Litecoin tweets. And the next step is actually just evaluating those individual accounts. So we've actually found, and this is something that we've discussed on Stress Test before, that over 90% of tweets come from bots or manipulative accounts or accounts that are inaccurate when talking about individual cryptocurrencies. So we employ a multi-step evaluation process for actually looking at accounts. So we're looking at how historically accurate those accounts have been when tweeting about a particular security or cryptocurrency. So if they tweet about XRP positively, what percentage of the time does the value of XRP go up within a week, within a month? And we're looking at different ways of evaluating whether the account appears to be fraudulent or not. For example, its follower to follows ratio, how long the account has actually been in existence for. And then once we weed out about 90% of tweets, the next step is really calculation. And so, using our proprietary natural language processor and leveraging our machine learning technology, we've actually built a dictionary of over 100,000 unique terms to evaluate tweets. So in this case, we see over-the-counter brokers see surge in buying activity as Bitcoin and crypto markets stabilize. The words surge and buying are both scored positively, and then we'll give that overall, tweet a positive score. And what we do, at the final step is convert that, raw data into actionable metrics. So what we do is something called normalization, and normalization is basically comparing one time period versus another. So what we'll look at is, how do Bitcoin tweets compare today versus the last 7 days? And the reason that we do that is because if you just compare Bitcoin tweets to XRP tweets, for example, XRP tweets, in general tend to be more positive than Bitcoin tweets. So what we do is we compare tweets on one particular asset to that same asset over a different time interval, because what we're looking for is momentum and changes in mood within the market. So we want to know that Bitcoin sentiment is 2 standard deviations more positive than it normally was, or Litecoin sentiment is significantly more negative than it normally was, for example.
It certainly seems a powerful tool, and one that you guys clearly understand well and have a good grasp on. But this is where the big announcement comes in place. Those eagle-eyed viewers may have noticed that on some of those slides, you could see the words eToro written in the background there, the investing platform. And now the TAI and eToro have a new partnership to create some fantastic new products. Joshua, what can you tell us?
Yeah, so we'd been talking to eToro for a couple years, kind of trying to figure out, ways to work together. And the reason that we did that is because eToro is the leading social trading platform around the world with over 12 million users. And what our core competency is and what we're really good at is measuring social sentiment. And it really did kind of feel like a perfect fit. So we went through and explored a bunch of different options. And what we realized was, is that the market is really democratized, is really not democratized yet as it relates to access to information, right? The sentiment data that we provide is great and it's super interesting, but we provide feeds of data that to this point are only basically intaked by quantitative hedge funds who are building sophisticated models around that data. And we wanted to make sure that retail customers and individuals could have access to that same data set and could leverage that same data set. What we landed on was basically taking that underlying data and building strategies to trade off of that data. So we announced on Tuesday the launch of our first strategy with eToro, which is what we're calling our long-only strategy. So it's basically a strategy which allocates to a subset of 13 coins based off of a few different sentiment metrics. So the first is what we call raw sentiment score, and that looks at conversations today over the last month versus the previous 6 months. And the other metric that we're looking at is something called poster score, which looks at the number of Twitter users discussing a particular asset over the last 30 days versus the previous 6 months. And what we found is super interesting, and I can pull this up here. We found something that's quite counterintuitive, actually. And what that is when sentiment is actually really high and the number of Twitter users talking about an asset is also really high, that's actually an inverted signal. So we actually find that that's been a sell signal. On the contrary, when tweet volume is really high and sentiment is low, or sentiment is really high and tweet volume is low, that tends to be a buy signal. So what we'll basically do is we'll decide to, so there's a basket of 13 cryptocurrencies, and you can see that here. And the reason we chose these were because these are the ones that were available worldwide for eToro users. We basically allocate to at minimum 3 and at most 13 of them at a time. Purely in a long fashion, so we're just buying these assets, and we've seen very strong historical outperformance of this long strategy versus just taking the same 13 underlying assets and equally weighting them. So we've been able to, in back testing, see significantly better returns combined with a significantly better Sharpe ratio, or in other words, the risk to reward ratio is much better investing in this particular strategy.
It seems that it could be a powerful potential tool. For the average investor wanting to get involved and use this, talk us a little bit through the sort of housekeeping. How do they get involved? When will the product be live? When will it be available to everyone on the eToro platform?
So the product's live now. You can get involved right now. You can get started at the tai.io/eToro. And you can read a bit more about the launch. We're actually going to release a much more long form article today, about 10 pages long, answering a lot of frequently asked questions. But you can get involved with the long only strategy. It's super simple. Go through our website, create an account on eToro if you don't already have one, and click a button. And basically what that button does is it helps you copy our portfolio. So we're not an asset manager. We're not a portfolio manager. We're not managing your money. All that's done on eToro. You're purely just copying the strategies that we have based off our underlying sentiment data. So the long only strategy is available currently, and we're actually, I've already signed a contract to release 2 additional strategies with them. So the first is a long short strategy, and the second is a market neutral strategy. And I'm really excited about that one. That actually equally allocates to long and short positions. So your net exposure in the market is 0. So we're 50% buying, 50% shorting. So you're never exposed one way or the other. And we've seen that that's returned about over 100% over the last 2 years, and the max monthly drawdown at any given point in time was 7%. So when you think of how highly volatile crypto markets are, and the price of Bitcoin can drop by 20% in a day, we haven't seen within a month the value of this strategy go down by more than 7%. And the Sharpe ratio there was about 3.5 versus about 0.1 for the broader market. So significantly better risk return profile as well. But yeah, the long one's available now. We think it's an incredibly interesting strategy, and we already have users that have started trading it.
All right, Joshua, it sounds like there's some fascinating developments on the way, some that are already out there, as you say. It'll be interesting to follow how the TAI develops this into the future. And of course, we'll continue to be here on BLOCKTV covering some of the best and latest news and information on sentiment data on Stress Test every week. Joshua, I want to thank you so much for joining us and breaking down this new development this week. Look forward to speaking again next week and see what's happening in the market. In the meantime, stay with us at blocktv.com for all the latest in news and information. I'm Asher Westropp Evans. Thanks for watching.
For more news and updates, follow us on Twitter.